Eric Muathe, Muathe.com. Let's take a look at the current chart for Pandora, which is down about 5%, and today being October 26, 2016. So a couple of things here. First and foremost, don't expect a bounce as long as the stock is trading below 30.9 on its daily RSI. Until it can move back above 30.9 on its daily RSI, it's going to be under downside pressure. And in fact, we can even use this chart to understand that principle. Take a look at this period here when the stock was trading below 30.9. There was no recovery. It's only after it moved above that level there that it started having a short-term move higher. Take a look at this period here where the stock was trading below 30.9 on its daily RSI, and check the description for why 30.9 is the number I'm using. And you can see that during this period here, the stock stayed and went on to make fresh lows. It's only after it moved back above 30.9 that we have a recovery of the lows of 2016. So again, for now, currently trading with its RSI at 27, one should not expect a bounce until it moves back above 30.9 on the short-term basis. Now let's take a look at some of the things that could have been the technical reasons why the stock is coming off recent highs. Number one, it's a simple line here connecting recent highs. As you can see, this came at the expense of the daily RSI, making lower and lower lows. That's always a problem. And also keep in mind that this high in price did not correspond with good movement in the RSI, because the RSI hit the resistance line. Also, this negative divergence happens to be with prices trying to make a new high, but the RSI fails to move above 61.8. This is always the worst type of negative divergence. So since then, at about 15, now the stock is coming here with the lows of 11 ever since this classic negative divergence, more so with the resistance at 61.8 as the stock was trying to make a new high. So on the daily, we can see a reason for the pullback. Now, one other quick observation is, of course, if we draw a line of this resistance level here of the highs and just draw it right there. Now keep in mind, this line happens to be the red line here. This line so happens to be at about RSI 61.8. You'll see that it gives us nice highs here. If you go and test this line on backwards, you can see those resistance there, short-term highs, resistance on the line during this short-term high. So this line has been a problem for this stock going back many months. Now if you take a look at the weekly chart, the weekly chart going back to 2011, you can see that coming off the highs, the RSI broke down here. So this break in the RSI brought the stock off the highs in the higher 30s, lower 40s. So we can draw a line from there. Every time we have uniform activity on this level or on this line, we should expect a pullback. Let's test that. Uniform activity above the line, back below it. That's a sell signal, classic sell signal there. This line is what I call a uniformity line, because every time you have uniform action, there's always something happening. Here we see it was a trap. And again, take a look at resistance here, here, and here for the highs here, here, and here. Ultimately, the stock was unable to move above that band of resistance. So this was formidable resistance, and since then we are seeing this strong pullback. There is also another way to look at this. Take a look at the highs here. Draw a line connecting RSI highs. You see that we hit resistance over the last couple of weeks. So again, let me draw that. There's a second line here, like that. So again, resistance over the last couple of weeks as the stock was unable to move above this line. So that those two lines, the previous line and this line, have been a problem, hence the pullback. Keep in mind the red line again happens to be at about 61.8 on the weekly RSI. Let's take a look at the monthly chart. And on the monthly, a couple things here. Number one, take a look at uniform activity rejection. When the stock tried to move its monthly RSI above 50 for the highs there. Again, uniform activity rejection over the last 2 months. And now we are seeing a continuation of the pullback. If we take a look at the RSI during this period here when we had resistance, here the MACD, excuse me, was also rejected as it tried to move above the zero line. So zero line rejection there, and right now we are seeing again, looks like the MACD is going above zero and now wants to move back below zero with uniform action. If you take all those things together, it looks like the stock still shows and displays lots of sell signals, especially if we go back to that daily chart. In conclusion here, one should not expect a bounce in the stock as long as the daily RSI is trading below 30.9. Again, check the description for why I am using this number. Eric Muather with Muather.com. As always, good luck, peace, and blessings. EACS.